right, welcome back to another edition. Yeah, that stock we were looking at as a short on Friday is down a lot. They announced that they were going to do a social media network. What's that guy's name again? Their CEO's a weird dude. I think Bitcoin probably drops today too. If the market keeps going down, Bitcoin will, under 91, under 92K is pretty bad. We're going to get Armageddon in the markets this year? I think so, man. All right, I was looking at Abbvie, trying to be constructive, find some longs. I kind of like Lilly. They're just going to do so well with GLPs. It's hard to deny. Wrong model. It's not in the Abbvie model. It's not Abbvie's drug. Okay, I did have it in here. I think it's going to be a lot bigger than this. I think those discount codes only work for 1 month anyway, so. And if you really need the discount code for 60 bucks, we all want to save 20 bucks here or there, but I think I'm giving you a lot of alpha, buddy. Talking to me about discount codes. We're trying to make millions of dollars right now, this second. Honestly, India's got a president that, knows all those terms. He sounds like he does, at least. We need a president like that, we go along too. We got Tarsus. People made money in Tarsus, man. Yeah, I was thinking of going up in size for MicroStrategy today. No, there's not going to be a good time to go long IonQ. You're Sharia compliant. You can go long pharma stocks. Like I said, Eli Lilly, man. You can go long. Oh, so you can't go long short stocks? Man, the market's down like 2% and people are talking about fear. It's all fear and greed and emotions running rampant. Never trust an Indian CEO. You're right. Google, Microsoft, IBM. These stocks are the worst. Okay. Oh man, look at this. Look at this baggies. Look at this baggie right here. What is QNCCF? Quantum emotion? What? Where does this trade locally? On the venture. QNC on the venture exchange. University's now switching to quantum computing away from the classics. Away from classic computing. You're right. It's over. x86 is done. Oh yeah, I want to look at the Transmedic thing. Thanks, Franco. Copper future's still good? Thank God. Thank God. If copper wasn't holding up, it'd all be over. No, I don't want to be an alarmist or anything. Black-Scholes, Environment for Cognitive Development. I think everybody should become familiar with Black-Scholes. So one way to do it is learning the options Greeks. So you can look at what the delta was of your option before the move. Yeah, it's a start. It's a start. No, there's no model that predicts option prices perfectly. I think Sana was interesting. I barely know anything about the company. I tried buying the stock. It went down right away and I dumped it. Yeah, I like LAES as the short. So I'm just going to look at Abbvie real quick and then we could take some requests. Yeah, I want to see the pharmacology of this thing, page 38. It's amazing how fast 𝗕𝗂𝗏's revenue fell. Yeah, we'll get them eventually, Ariana. Haven't looked at Iova in a little while. Okay, so looking at Abbvie, 174. I think the first step to hedging is just looking at beta and single stock exposure. So if you have any one stock that's really going to swing your portfolio, you might consider hedging it. And then the same thing with beta or any other factor like country or sector or whatever. So we have too much sector exposure. You might consider hedging that, for example. I don't read too much philosophy. I certainly have. My father was a philosophy buff. So I have thousands of philosophy books. I wouldn't consider Jordan Peterson philosopher. Yeah, Jensen, well, when you say post hoc, ergo propter hoc, what do you mean? These stocks were going to kind of crash anyway. Didn't really matter whether it was Jensen or me or anyone else, But I do think you can assign the causality simply from the temporal reaction, but the market after hours had already sort of processed the Jensen stuff, and the next morning it really hit the fan. So it's hard to say. Some people say it was me, but I've been pounding the table on quantum for a while. So now Zuck is piling on too. Yeah, I was looking at Taiwan Semi the other day. I do think the video I made was pretty funny. A lot of people like that. I think I did the Taiwan Semi privately. I don't really know these businesses that well. So sometimes when I look at a sector I don't know that well, one of the reasons I'm even doing it is to try to learn it so that I know it down the road. Yeah, I've been looking at retail stocks here and there, restaurant stocks. I don't think you can move away your business that easily. They could diversify their business a little bit. A lot of traders wake up pretty early. It's a good question, Iceman. I mean, over time, I've spent so much time thinking about that, but I'm not very good at it. Sizing positions. And it's kind of one of my weaknesses. That's why I'm not a trader for a living. I'm an entrepreneur. But if I were to trade professionally or other people's money or something like that, I would be a lot more careful about how I enter and exit positions, especially with size. Entry and exit are a little different from size, but size, I mean, you should never have any position that's a lot bigger than 5 or 10%. And I think that people who do that are sort of have a crutch for the fact that they're bad stock pickers. Because if you like are good at your job, you don't need to have one stock that you're long and you're praying will work. You can have 10, and you know 7 will work and 3 won't. You know what I mean? But if you suck at investing, you might go all in on one stock because you're like, oh, this is the one thing that's going to bail me out. And you're no different from a gambler sitting clutching a lottery ticket praying like a fool that your number will hit. But if you know what you're doing, you could have 10, 20, 30 stocks that you say, okay, this is my portfolio. You know, and that's still very concentrated. You know, there's 500 stocks in the S&P 500. That's a portfolio too. That portfolio is done really well. So you think you can beat the S&P 500 with one stock, you're just sort of stupid. But if you think you can beat it with 30 or 40 stocks, that's still pretty concentrated risk. Some people try to beat the S&P 500 with 400, 500 stocks. They also have teams of people to do the work. The thing about investing is there's no crying in baseball. You can't say, oh, well, you know, my portfolio sucks because I don't have the talent or team that I need to do my job correctly. Well, too bad. Cry me a river. It's like saying to the bear that eats you in the forest, that attacks you, that mauls you, hey, it's no fair. You got those big claws and the big teeth, and I'm just a human. I don't have those things, man. And before it's finally snapping your neck, the bear says, I know, I'm a bear. Get a good portfolio or go give me your money, one or the other. I've been streaming since 2015. I just enjoy it. It gives me some visibility. So, you know, it provides some opportunities for me. I don't think Rigetti will ever go to 100. Trade and a successful trader. Well, again, I have to tell you guys, you know, even though I've taken my account from 100,000 to over 2 million in the last 3 or 4 months, that I'm actually not a great trader. I want to be clear about that. I know that sounds strange. Most people would like to have those kinds of results, but I think that the risks I took in that account were so high. There was a time when I felt like I was going to have well, Quantum's only been up for about 2 months, so we called it at the time, and those stocks went on a huge run, and obviously they came back down. I'm not saying I'm not a good investor. I'll take the credit for that. But I think that a good trader limits their risk. I think that's probably one of the biggest things. But, you know, it kind of reminds me of the Beatles. One of those, I think it was Lennon or McCartney said that, you know, a great musician knows when to break the rules. Otherwise, if you stay in key every note, it's a boring song. It's when you go out of key for one note, that's what makes the song beautiful. I think that for trading, you generally never want to go out of key. You know, limit your risk, limit your risk, limit your risk. That's the general idea of trading, is always limit your risk, take stop losses. I don't do stop losses very well. I set up kind of some risk limits, but there are a lot of trades I put on where I say implicitly or explicitly ahead of time, I'm willing to lose it all. And a good trader does not do that. A good trader would never do that. And so I think that the P&L of a good trader looks kind of like this. It looks kind of like this, okay? And the P&L of someone like me, at least lately, it sort of looked like this. And, you know, obviously, which one would you rather be? You know, at this moment in time, yeah, the green line's ahead of the black line. But at what point, you know, At this point, you feel like yourself. At this point, you think you're God. I think the black line's a better line. I trade stocks. I do options too. Yeah, I think I'll take that, Wiz. Again, like, all these are really good trader questions, and like, if there's anything I'm really good at is fundamental analysis. I know people want to be great traders. There's no better thing than being a great trader. But the problem is the amount of people who are good traders are very, 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 very low. And there's a lot of LARPing going on. And I'm not going to LARP to you guys. The amount of people I can call a good trader that I know personally and I've worked with or work with now, it's like 2 or 3 people, man. It's not a lot of people. And even those people have self-doubts here and there and have cold runs. Being an analyst is easier. But the problem with being an analyst is, a lot of people can do it. It's not that hard, and that's what I'm sort of showing you guys. But the person that has to execute the trades, that person has to have a lot of discipline, a lot of risk management. One of the lessons that I've learned over time about psychology, and I've said this before in these streams, is that smart people have a really hard time trading. Because very smart people, and I'll put myself in that category for a minute, a little moment of hubris, but if you're above average intelligence, let's put it that way, and this kind of scales, unfortunately, what ends up happening is you become, well, throughout life, you've been sort of, you've gotten used to this idea that you're always right and you're very smart, and that when you are here to solve problems that you get the right answer. And the problem with that is that the stock market's a very tough problem. And you'll come across a problem like IonQ, right? And you'll say that, well, IonQ is a short, quantum's 30 years away at best. These machines don't work. I know a lot about quantum mechanics. I studied that as a kid. And you short the stock and the stock doubles. I'm still right. I have to be right. And you keep shorting it, and the stock doubles again and again and again, and you lose all your money. And you're now working for a guy named Tony and went to community college. But Tony's a good trader because Tony knows how to take risks and size his positions correctly. So Tony from Long Island doesn't know anything about quantum mechanics. He can't spell quantum mechanics. So the point is that the people who are humble, they tend to be pretty good at, and they have a special skill. Some people say they're born with it, to manage risk and manage capital. But the person who's intelligent, they want to take out their intelligence on the market. And anytime you feel like you're taking out an emotion on the market or any dynamic like that, that's the dangerous thing. And some people say you're supposed to stop doing that. Some people say you can't stop doing it, so you might as well listen to it and harness it and learn the feeling. You can't change your feelings that easily, your behavior. So I think that if you try to manifest your intelligence in the stock market, it's not going to go very well. If you try to listen to the rhythms of the stock market and understand what's happening, it might go a little bit better. But the second you start putting yourself into it as the observer, it's kind of an observer effect. Speaking of quantum mechanics, you end up having an issue with just various biases. Probably the biggest one that I've been a victim of, and I see all the time in other people, is I am so smart. If you fade that too hard, you end up becoming a slave to the price action, which a lot of quote-unquote good traders are. And that's kind of where I like to push back on the strong trader that is just sort of driven by price dynamics and money flow. I think that in this example, I probably beat that trader P&L-wise, but not risk-wise. So on a risk-adjusted basis, they probably still won. But for me, I was willing to say, I'm shorting this to the end. I'm making a big fat bet. You're going to stop yourself out 6 times. You're going to find some other stock to trade. This is real alpha. These stocks are worth nothing. I'm ready to risk it all for this. Who's right and who's wrong in this scenario is tough to say. The trader needs people like that for alpha, but it also may not mean that trader or that the person generating that alpha should be putting in the trades. and should be kind of finding a risk manager. And yeah, the market's smarter than all of us individually. So the market knows this stuff. I think that it's very hard to sort of bet against the market, say that you're smarter than the market. It's very hard. You know, somebody was asking, like, is it Jensen that knocked those stocks down? Those stocks would have gone down anyway. And it was just a matter of time. And timing this trade, you know, it's very cliche to say timing is everything in trading, and it is. But the timing of that trade was very hard to predict. And that's why I like to be in these trades regardless of the price action, because something like that sort of tends to happen. If these stocks get so hot, why do you think that those stocks were mentioned at all to Jensen and to Zuckerberg? Because they were so hot. So they have this reflexive phenomenon where because they got hot, they imploded on themselves. And that happens a lot. They attracted attention. If they just slowly melted up kind of quietly over the last 2 years, that'd be different. But that's not what happened. They just went up went to the moon. So, but yeah, I would not recommend my strategy of bet big. If you're wrong, bet bigger. Like, it's just a great way to go broke. That's about it. You will go broke at that rate. Like, there's no doubt about it. And some people will call that being a riskaholic. It's a serious thing. It's a serious thing. There's a lot of people out there who are riskaholics. They want more risk, more risk, more risk. And if you're battling riskaholicism, the best thing you could do is just stop trading at all. I mean, and I know somebody out there right now is listening to this and saying, I think I might be a riskaholic. And I know some of you are chuckling, but the reality is it's your money and you've worked hard for it. You know, there's a lot of doctors and other people like that want to trade the market. And they say, well, I've done so well in my career as a physician. Why shouldn't I make money in the markets too? Well, you're asking too much. You know, life, you got a good hand in life. You know, you got the brains to become a doctor. You got the ability to do it through your family and your credentials and all this, through your, being born in America or whatever. Being an American doctor, you're in the top 0.1% of income earners. Now you want to make money in the stock market too? Come on, man. At some point, you're tempting fate, and most doctors are just terrible investors. That's the meme on Wall Street, is whenever your doctor or your dentist recommends a stock, it's time to short that stock. Now, my dentist was telling me about Fartcoin because my dentist checks out my tweets sometimes, and he thought it was funny because he has a buddy that's in crypto. Yeah, Jack, everybody has an uncle or some other person that's like the tell for their really bad stocks. No dentist of mine is going to be a bad investor. Just being my dentist makes you rich. But no, in all seriousness, I told my dentist to buy Eli Lilly, and that stocks are probably a bad investment for the next couple of years, or at least unlikely to outperform very much. Caught up everything on Abbvie numerically, at least. Error somewhere here. Let's see. Yeah, I don't really do bonds. People who trade bonds can make a fortune, just not for me. Don't know much about insurance companies. Sorry, man. 𝗫𝗫𝗃 is kind of a fake. The data is very fake. I don't know much about Carvana, to be honest. It's kind of hard to imagine it being a good long, but like I said, I don't know much about it. Enovis doesn't have a drug. Enovis is the fakest company. That reminds me, after this quantum craziness is done, I got to short some Enovis. I have to refresh my look at ABCL. I don't know. I mean, it's just all these antibody companies, they're almost always like just great investments over time. Okay. So for Abbvie, haven't looked at Butterfly Network. Somewhat suspicious. So Abbvie's sort of fairly valued. Lilly's somewhat cheap, but not really, sort of fairly valued as well. Yeah, I started reading the Transmedics. I didn't get time to finish it. That guy writes really long reports that it's not really always clear. I think he's a little verbose. Like, I don't think you need 150 slides or 200 slides to get your point across.